Today we're going to talk about the latest on the student loan forgiveness and how this ties into the housing market. If that sounds like something you're interested in, then stay tuned. My name is Jack Cline. I'm a local realtor here in San Diego, and as you may have heard, the student loan forgiveness that was proposed by Joe Biden was declined by the Supreme Court. And the payment freeze is over after almost 3 years. Payments are expected to resume in late September or early October. And the crazy part about it is that they're expecting the defaults on these loans to skyrocket. Why? I'm not really sure, but shortly after the first proposal was declined, Joe Biden submitted a second proposal. Call it Plan B. And this proposal is supposed to help make these student loans easier to repay. How that's going to happen is unsure yet, and there's also talk that he could be trying to target specific groups of people instead of allowing anyone and everyone to qualify for these loans. Which group this may be is also unknown, and it could be up to 12 months before any decision is made on this. Joe Biden is also trying to argue that there be no accrued interest during this time and no penalty if borrowers were to default on their loans. So pretty much what you're saying here is that you have to resume making payments. However, if you don't make them, nothing really happens. So I'm not sure how this is going to incentivize people to actually repay these loans. And in a sense, it kind of just feels like there's still no payment that is actually due if that were to pass. In my opinion, I'd be prepared for the worst case scenario, and I'd be ready to make those payments when the time comes. Because the last thing you want to do is take a chance on this and ruin your credit. Because one thing that's not forgiving is your credit score. And so many things are bought on credit nowadays. And the lower your credit score, the more expensive everything is. Whether you buy a car, whether you buy a house, you buy furniture, anything that you put on credit is going to have a higher interest rate and essentially cost you a ton more money. So believe me, it is not worth taking a chance to default on these loans, hoping that someone comes and bails you out. All right, so how does this tie into the housing market? Well, affordability is already at an all-time low, and it's already difficult to buy a home. So now we have over 40 million people that are going to have to resume paying the student loan debt at an average payment of $300 to $400 per month. All right, so if you are one of these people looking to buy a home and you were already struggling to get qualified for the amount that you need it, well, now it's going to be even more difficult because when you go to qualify, your debt to income ratio is going to be higher, therefore qualifying you for less money. All right, not to mention, if as many people default on these loans as they're expecting, then all of those people, their credit's going to suffer. And when it comes time for them to buy a home later down the road, they're going to have higher interest rates, higher private mortgage insurance premiums, and therefore higher monthly payments. So, if they think it's unaffordable now, it's going to be almost out of reach if that happens. Yeah. And something else that I don't think a lot of people consider is the amount of money people pay in leisurely activities, whether that's shopping, going out to eat dinner, going to the bar, traveling, whatever it might be. And I mention this because when you factor in your debt to income and what you can technically afford, that's not factored into it. So let's say you do go out and buy a home and they say you can qualify for X amount of money, all right, and this is gonna be your payment and you can technically afford it, right? Well, what they're not telling you is, you're probably gonna have to give up a lot of those leisurely activities that you do in order to pay for your mortgage, So for some people this might be tough because this is your quality of life and these are things that you really enjoy. And, the past 3 years you didn't have, student loan payments to make. And so now all of a sudden you have to come up with $300 or $400 extra per month. Well, that's going to cut out a lot of those leisurely activities. And again, the main reason why I mention this because I don't think a lot of people consider this, when they're breaking down their monthly expenses. Some might, I'm not saying no one does, but it's just something to consider. And that's all I have for you guys in this one. Let me know your thoughts down in the comments, and if you found this video helpful, please smash that like button, subscribe to the channel, and I'll see you guys in the next one.